We know that profit is referring to total revenues minus total cost, but we get profit. There is economic profit or super profit and accounting profit. So in accounting profit, you can say total revenues minus expenses or costs that were used in operation of that business. For example, payment of wages, salaries, rent, the business, those are expenses. That is accounting profit. Revenues minus total cost. Total revenues minus total cost. In the economics, profit is determined by total revenue minus explicit cost minus implicit cost. What is explicit cost? Explicit cost is the expenses of every day that you are using to run business. We call explicit. Can it be visible? Can it be seen by eyes? You know, that we call explicit cost. For example, payment of wages, payment of rent, salaries, money that we use to buy machinery or other expenses. We say total explicit cost. That is cost that can be visible, you can see it. But implicit cost, that is a cost of foregone. Say foregone, it is an opportunity cost. Implicit cost is an opportunity cost. It means a profit that you should get when maybe money you have invested in it. Instead of investing in a business, you have decided to invest that amount of money in the bank. You know, investing money in the bank, you will get interest. Maybe interest is 10% per year. So after calculating the amount of capital that you have times interest, you get amount of profit that you will expect to get. Instead of sending money to the bank, you have decided that money to invest in a business. So in a business, there is explicit cost. So if you are making comparison between the money that you have invested in a business and the money that maybe you would invest that money in a bank, and then you will get certain amount. So profit always is total revenue minus total cost. I mean explicit cost. After getting that amount, you will minus implicit cost. It means the profit that you have lost. Maybe you could invest that money, you would invest that money in the bank instead of invested in the business. So that is unseen because you are guessing that amount will could be so by rate of interest in a bank or rate of return from bank. So implicit cost, in another word, is say normal profit. Normal profit is a profit that is obtained by maybe you have capital you are going to invest in the bank. After 1 year, you will get maybe 10%. Your money will increase by 10%. That 10% we call normal profit. But supernormal profit or economic profit, you need to compare. If that money, capital, you have invested in the business, and that capital also, maybe you could invest in the bank, what will happen? So supernormal profit is happening by taking total revenue that you have got, you minus total expenses from your business, you get accounting profit, or you get profit of the organization that you have get. So in order to understand whether you have got normal profit or supernormal profit, you need to take that amount of money, profit that you have get, minus normal profit that you might get it when you have invested that money in a bank. After getting that amount, you get supernormal profit. So to supernormal profit is total revenues minus explicit costs minus normal profit that you expected to earn from the bank. Revenue is equal to price of selling times quantity that you have sell, unit quantity that you have used to sell. Abnormal profit is normally happening when maybe you are in an organization, you have different competitors. Sometimes competitors can decide to exit in the business. So you can be alone. So you are getting abnormal profit. So profit is going to be high compared to normal. It is like supernormal profit, but abnormal profit can be sometimes high because you are alone. The quantity that you are selling is very high, so you're getting high profit. Also, abnormal profit can occur maybe government subsidies the industries. So that amount of money, when they go to the industry can have supernormal profit. Support from the government to contribute in interest. There is opposite of abnormal profit. There is abnormal loss. You know, in business, abnormal loss can occur. For example, fire burn all the properties of industries. That is abnormal loss because you didn't expect that loss to occur. Maybe car has got accident. Abnormal loss that occur in the business.